I think that today's sell-off was another buying opportunity for Schiff Gold customers to go to the Schiff Gold website on Friday, on Saturday, and even Sunday morning, because I expect another big run-up in gold and silver prices Sunday evening into Monday. So there's a good chance that we get a big run-up on Sunday night and then an even bigger run-up on Monday morning as Americans who got out of their silver and gold rush to get back in. But all the dips were buying opportunities. Don't be afraid, right? A lot of people, they see this volatility and it scares them out of the market. You know, at some point, $100 drop in the price of gold is not going to be very much. It already is not that much when you talk about 4,000. But wait till it's 10,000, right? Then $100 is an even smaller move, 1%.
Volatility across precious metals continues to highlight the strength of underlying support levels, with both gold and silver maintaining price action far above previous long-term thresholds. Sharp intraday declines are being quickly absorbed by renewed buying, signaling persistent demand in a market shifting away from speculative assets and back towards stores of value. As liquidity tightens and risk appetite fades, hard assets are increasingly benefiting from capital rotation out of sectors facing extreme volatility. Peter Schiff, a longtime advocate of sound money and precious metals, emphasizes that recent pullbacks are less a sign of weakness and more evidence of strong market foundations as investors respond to macro pressures. His broader view points to a structural shift away from high-risk digital assets and overstretched technology valuations, with capital moving towards sectors supported by real earnings and long-term fundamentals. The sharp divergence between gold miners and major equity indices reflects this rotation, as miners begin responding to higher metal prices and improved operating margins. Meanwhile, stress within crypto markets is accelerating the shift towards safer assets, reinforcing gold's position as investors reassess their risk tolerance. With rising yields, weakening confidence in fiat currencies, and ongoing liquidity challenges, the setup remains favorable to precious metals as the next phase of the cycle unfolds. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Silver again soared over $1. Gold was up over 50 bucks. And then near the open of our market, or just before, there was a huge sell-off, and gold dropped like $130, $140. Silver dropped over $1.50. Not from the high, but went from up over $1 to down more than $1.50. So more than a $2.50 swing in the price of silver between the time U.S. markets closed and U.S. markets opened. But I think what's the most significant about all of this volatility is that it's taking place above 4,000 for gold and above 50 for silver. That's what I've been saying. 50 is the support for silver. Now, it can trade below it, but that's really where the support is. That doesn't mean it can't trade 49 or even 48, because silver is inherently pretty volatile, and so it's hard to stop at a round number. But this is about the support. Gold, 4,000 is key support, and we've managed to go below it, but not by much. Gold never went below 3,900 after it went above 4,000. The lowest I saw was maybe 3,910 or 3,920. Silver did go below 50, but then it came soaring back. I mean, when silver almost hit a new high on Thursday night, gold was still maybe 200 bucks away from a high. Gold got, less than 200, but because gold got back above 4,300, I think. But after today's sell-off, it's back below 4,100. But this is very constructive trading as far as I'm concerned. 4,000 is the new 3,000, just like 3,000 was the new 2,000. And silver, when silver was at 40, I said 40 was the new 30, and now it's almost like 50 is the new 40. Yes, silver did go below 40 a few times before it rocketed up to 50, and that's why it may go back below 50, especially when we're only 60 cents away. But I wouldn't wait. I think that today's sell-off was another buying opportunity for Schiff Gold customers to go to the Schiff Gold website on Friday, on Saturday, and even Sunday morning, because I expect another big run-up in gold and silver prices Sunday evening into Monday. Now, maybe it won't be sold off in the U.S. time zone. What I've managed to notice is that the big sell-offs happen later in the week, not earlier. So there's a good chance that we get a big run-up on Sunday night and then an even bigger run-up on Monday morning as Americans who got out of their silver and gold rush to get back in. So it's another great weekend buying opportunity at Schiff Gold to load up on gold and silver in particular, which I think has got an explosive move that's coming. But a lot of other things happened that are bullish this week, fundamentally, for both gold and silver. So one of the things is the carnage in crypto. It's pretty clear that there is a major rotation going on, and it's not just from growth or risk type stocks to value dividend paying stocks. That's happening too. But it's a general risk off trade. Not that all equities are risk off, but portfolio managers seem to want to have less risk. So the most riskiest assets are getting sold and people are moving into other assets that have less risk. They don't want to move into bonds, right? Because the old safe havens are no longer safe anymore when you have inflation as the primary risk and a dollar debasement. That's why Treasury prices were also down today and down on the week, and yields are rising. But we saw moves down in tech stocks. Tech got hit pretty hard. In fact, the NASDAQ was down about 4.5% on the week. In contrast, look at gold and silver stocks. The GDX was up 5% on the week, almost as much up as the NASDAQ was down. And the GDXJ almost up 5% as well. Now, of course, these gold and silver mining stocks would have been up a lot more without the losses from today and yesterday, right? And so it could have been a much bigger move. And I think it will be a much bigger move next week as the rotation out of risk continues. Because yes, there's risk in gold mining stocks, but not nearly as much as there is in these tech stocks. And there's a lot more earnings behind them. There's a real strong fundamental story for the gold stocks. In fact, Barrick Gold came out with its earnings Monday, and over the first 3 days of the week, Barrick Gold was up 13 or 14% before pulling back with these violent, sell-offs in gold. But that highlights the powerful potential of the gold mining sector to earn money in this gold bull market. And so this is bullish for gold because it's going to bring more money into this sector, but also it's what's happening in crypto because crypto got beat up the most, more than just AI-related stocks. It was anything even tangentially related to crypto. The Bitcoin that MicroStrategy bought, right? Michael Saylor, on behalf of MicroStrategy, he spent over $47.5 billion. And God knows what he spent over the last week, because this is the number as of the prior week. He's going to announce on Monday how much money he blew this week, right? But over $47.5 billion to buy more than 640,000 Bitcoin. His average price is just over $74,000. Now the price is a little over $94,000, $94,700 as I speak, right? It's selling off a bit. That is a 27% gain over 5 years of buying. So MicroStrategy, right? Michael Saylor is going all around the world telling everybody that Bitcoin is the greatest asset that there is, that U.S. government should just sell all of our gold and we should just put it all in Bitcoin, that everybody should just buy Bitcoin instead of real estate, instead of precious metals, instead of stocks, because the returns are going to be so phenomenal, it's going to dwarf everything else, that there's no point in being diversified. In fact, you shouldn't just put everything you have into Bitcoin, according to Michael Saylor. You should put everything other people have. You should borrow money so you could put more money into Bitcoin than you actually have assets, right? Go into debt, according to Michael Saylor. Bet the farm, mortgage the house, right? Take out a loan against your business and buy Bitcoin because it's so great. He is up 27% over 5 years of buying. That's it. I mean, if Michael Saylor had simply, every time he went to buy Bitcoin, if he had bought gold instead, had he bought silver instead, had he bought the S&P 500 probably, he'd have more money today than he has because of all the money he's squandered on Bitcoin. But the other big difference is he can't sell. That 27% profit means nothing. It's on paper. He can never realize it. Had Michael Saylor bought $47.5 billion worth of gold over the last 5 years, and he'd be up way more than 27%, he could sell it all. He could actually realize those profits if he wanted to. It is impossible for MicroStrategy to ever realize any profits in Bitcoin. All it's going to do is eventually go bankrupt, and the Bitcoin is going to get sold off. But the significance of all this is money is coming out of crypto. That's obvious, right? All these stocks are getting obliterated, one after the other. Stocks down 70, 80% or more that are Bitcoin treasury companies, Bitcoin exchanges. The whole thing is imploding. But not only is this good for gold in that it's going to, put gold, back in front, right? It was on the back burner. Everybody was focusing on Bitcoin because, Bitcoin is better than gold. Bitcoin is gold 2.0, right? It's doing so much better. Well, clearly gold is doing much better than Bitcoin. And so the conversation is changing in favor of gold. It's get rid of your fool's gold, buy real gold. So that's bullish for gold because money that was being diverted into crypto can now go back into gold because investors want less risk. Bitcoin is more risk. Bitcoin is about the riskiest thing you can own. So if you're trying to de-risk your portfolio, right, you don't want Bitcoin, you want gold. But also, as the Bitcoin bubble collapses, that hurts on paper U.S. economy. The GDP is going to be impacted. Unemployment is going to rise. A lot of people that work in the crypto industry, not only are they going to lose their life savings if they have it in crypto, but they're going to lose their jobs. They're going to lose their income. So this is going to mean, more Fed money printing, and that also is going to end up being bullish for the price of gold.
Market conditions continue to reveal significant stress points as shifting expectations around monetary policy collide with rising volatility across multiple asset classes. The uncertainty surrounding potential rate cuts has prompted investors to seek safe haven assets, reinforcing upward pressure on both gold and silver, even as broader risk markets weaken. While traditional logic suggests higher rates should weigh on precious metals, the reality is that policy restraint, combined with persistent inflation and a reluctance to tighten further, creates an environment where real returns on cash remain profoundly negative. This reinforces the appeal of tangible assets while undermining confidence in the purchasing power of the dollar. Meanwhile, policy proposals involving tariff-related rebates and expanded fiscal injections highlight the inflationary impulses building beneath the surface. As funding mechanisms increasingly rely on rising tariffs, redirected tax burdens, and additional stimulus, long-term currency erosion becomes more challenging to avoid. The pressure within the crypto and high-growth technology sectors further illustrates the broader rotation toward assets with stability, durability, and intrinsic value. With volatility intensifying and speculative markets losing momentum, the path ahead favors assets tied to fundamental economic foundations rather than financial engineering or leveraged narratives. Let's get back to the interview.
A rate cut in December is no longer a sure thing. It's basically a coin toss at this point, based on a lot of comments made by FOMC members that they're not really sure, what they're going to do with rates. And so that was hurting risk assets. But it's interesting, money flew into gold and silver, even though they're talking about not cutting rates. People think, that should harm gold and silver because, gold and silver want interest rate cuts. But because they may not cut rates, investors want safe havens. And that's gold and silver. And by the way, it doesn't matter to gold and silver if the Fed cuts rates or not. What matters is they're not raising rates, and they should. Interest rates are too low. They were too low before they were cut. They never should have been cut. And because they were cut, and because everybody knows the Fed's not going to hike, no matter how high inflation rises, well, that's bullish for gold. But other things that happened during the week that were bullish for gold, one was the announcement that we got on Sunday, which is one of the reasons that I think gold gapped up or opened over $100. I don't know if it gapped up, but it closed up over $100 on Monday, which was great for the people who bought gold on Saturday, like I told you guys to, right? I did this video, or I did one last week, and I said buy over the weekend. So we had a $100 rally. But one of the reasons for that $100 rally was Donald Trump floated the idea that everyone's going to get a $2,000 tariff dividend, that every person, not even every household, except the rich, right? Except the high income earners. So probably 95% of the people are going to get $2,000 checks, according to Donald Trump, which means, a family of four is going to get $8,000. Well, where's that money going to come from? Well, according to Trump, it's just coming from like manna from heaven. It's like a gift from the gods because it's coming from the tariffs. Well, first of all, the tariffs are paid by the same people that Trump wants to give a tariff dividend to. In fact, he let the cat out of the bag. I did mention this on the other podcast, but I got to throw it in again. But there was more news on that today. Donald Trump is now promising to lower tariffs on coffee, on bananas. Why? He says that this is necessary to lower those prices. Coffee prices are high. Banana prices are high. So Trump wants to lower the tariffs to lower the prices. Well, wait a minute. If lowering tariffs means prices go down, then raising tariffs means prices go up. So if Trump is admitting that he can lower prices by lowering tariffs, that's an admission that tariffs cause prices to go up, right? Trump told us that foreigners would pay our tariffs. So why aren't the banana farmers in South America eating our tariffs? They're not. We have to eat our tariffs if we want to eat their bananas, right? So Trump has basically exposed the fact that he lied to us by now lowering tariffs. And so if lowering tariffs on bananas and coffee is good, why not lower them on everything, right? Why not help bring down the cost of living that is continuing to rise? But the point I want to make on these rebates is they're inflationary. They're good for gold. Where's the money going to come from so that these, tariff dividend checks don't bounce? Oh, and by the way, the very concept of a tariff dividend check shows you that the tariffs are all politics. They don't mean anything. And maybe Trump knows this. Who the hell knows what he knows? But if you're going to give people who you're tariffing back the tariffs, you've accomplished nothing, right? The purpose of the tariff is to make imports more expensive so that Americans don't buy as many imports. But then if you give those same consumers a check for a bunch of money, and now they have more money, well, now they can pay the higher prices of the imports. So the tariff dividends get used to buy imported goods. And so it negates the entire purpose for which the tariffs were imposed, because the tariff dividends run up the trade deficit. So the whole thing is nonsense. And that's another thing, that's good for gold when it exposes all of the nonsense in the Trump administration. I talked in length about the stuff going on in the mortgage market. So government created that problem, and only the free market could solve it. What the Trump administration is trying to do is make it worse, but flooding the economy with more cheap money to sustain a housing bubble is bullish for gold and silver. It's just another development on the week that is going to drive more money into gold and silver out of U.S. dollars. Look, this whole bubble is deflating in crypto, in AI, housing, right? In the bond market. Look at bonds getting beat up, and they're doing whatever they can. They have to stop. I mean, they don't have to, but as far as they're concerned, they have to, because they can't allow a recession or a financial crisis, even if in the long run it's something we need. In the short run, they don't want that, right? The Trump administration, all they care about is making the economy look good until Trump leaves office. The last thing they want is the bubble to deflate while he's still there, right? And so they got to do whatever they can to blow as much air into this bubble. That's going to mean maximum pressure on the Fed to cut rates, which is why the Fed's going to cut rates. And when they get a new FOMC chairman in there, they're going to go even more. The Fed's going to go back to QE to prop up housing, to prop up the market. Maybe they'll think they can prop up Bitcoin. Who knows? I don't know if there's any way to get the air back in that bubble. There's probably too many holes. But since the president's family is all in on crypto, they're obviously going to try to do what they can with with cheap money. And so all this is going to drive the dollar down. Surprised it hasn't already dropped, but it's going to drive gold and silver prices much, much higher. So as I said earlier in this video, a volatile week, but all the dips were buying opportunities. Don't be afraid, right? A lot of people, they see this volatility and it scares them out of the market. You know, at some point, $100 drop in the price of gold is not going to be very much. It already is not that much when you're talking about 4,000. But wait till it's 10,000, right? Then $100 is an even smaller move, 1%. And, you know, the volatility in silver, I think it's all a positive. It's all a sign of a breakout, but it is keeping some investors who might otherwise buy on the sidelines while they watch as speculators as the market keeps going up and they're too afraid to come in. At some point, that fear will be replaced by greed. We're not there yet. All of the greed is still in Bitcoin. Now, eventually, that greed is going to turn into fear. And that's when the bottom is going to fall out of the crypto market. We're not even close to the bottom yet, right? We got a long way to go down, but we have a long way to go up in gold and silver.
The shifting landscape in monetary policy, fiscal intervention, and market sentiment continues to reinforce the long-term case for precious metals. As volatility rises across risk assets and the broader economy absorbs the effects of inconsistent policy signals, investors are increasingly gravitating towards store-of-value assets that offer protection from currency erosion and political uncertainty. Persistent inflationary forces, tariff-driven price pressures, and ongoing attempts to stimulate demand through fiscal incentives highlight the fragility within the current economic framework. Meanwhile, stress across high-growth sectors and speculative assets underscores the broader shift toward stability, prompting capital to flow toward markets supported by absolute scarcity and fundamental demand. The environment ahead appears shaped by elevated volatility, weakening confidence in fiat purchasing power, and growing recognition that the foundations of the existing monetary system are shifting more rapidly than anticipated. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.